All right, since the last video I did on crypto, I had quite a few questions asking me about how you'd get into a crypto trade. Like, how would you analyze a crypto market? Is it different from any other market? And whilst I say I don't primarily trade crypto, what I will say is the way markets move are very similar across each and every single market because they're all driven by price, which is all driven by human beings. And in this video, I just want to break down how you might approach a really high probability setup on not just crypto, but any market. For this example, I'm going to give you Ethereum, which is a market that is in the crypto space that I don't trade. But the reason I want to pick that market is because you can follow this on from here on out and see how it plays out. I hate all that hindsight BS, so I'm going to give you real, raw, technical analysis that you can go and look at and apply to your own trading. So first things first, what you're seeing on the screen right now is what we call a pennant pattern. And these are very, very prolific in cryptocurrency markets. In fact, when I first got into Bitcoin, I'm going to put the video up right here that you should go and watch. Back in October 2018, I think it was, or 17, is how I got my first place into Bitcoin, and it's this exact setup. And then I got in again in February 2021, which is exactly the same setup again. And since then, these particular patterns have been prolific throughout the crypto market. And before we get stuck into that, I want to draw out to show you what that is. Then I'm going to take you into the charts. So let's show you that. Okay, so what we're seeing here is what's called a bullish pennant breakout pattern. And what typically happens is, following a new high, the market starts to put in a series of lower highs and higher lows until it compresses into this channel. And if you imagine, there's an invisible channel forming here, and what it looks like is this. And usually what we see is a break to the upside, but sometimes in my own testing, what we found is it doesn't always break straight out to the upside. There's two different scenarios. One, we push straight up to the upside, which as I've drawn here, but two, we dip down about 20% of the move and then rally to the upside. Now it's important that you listen and hear me out on my findings on my own personal testing here. To push up to here, what I found, there's about a 72% strike rate. Okay, in other words, we're going to push up to an extension of this flagpole. There's about a 72% chance of that happening. Down, whether or not we push straight up or push down first, I've found there to be about a 50-50 chance of that happening. So in other words, you need a way, if you are going to trade these and capture these moves, you're going to need a way of capturing this and not missing it. Or if we dip down, you're going to need somewhere to place a stop loss that's going to give it enough breathing room and then allow you to capture the move to the upside. Obviously, the reward to risk profile on this is going to be much greater than this one, right? But ideally, you want a way of capturing them both. So as I said, it's about a 20% dip, and the 20% is measured from the previous low here to the high, and it's about a 20% move. Okay, so this is 20% of this entire move, and anywhere below that is going to be where I would personally place a stop loss. I don't try and bottom pick these moves. If you go and watch the video that I put out on Bitcoin, I said I'm not bottom picking, but once we get that push down, then I'm going to be looking to get in. And this is what we call a bullish pennant pattern. Now let's look at what's going on here in the charts. So as you can see, we've got this exact pattern playing out right now, right? We've got this compression channel, and now we've just dipped down. So as we've already in that dip and we're starting to push up already, because of the last video I did on this particular pair, I was giving you guys a demonstration on how you can actually just get involved, and we were trading around here, but that wasn't the best time to get involved. And as you can see now, we've rolled over and now we're starting to push up. So the consensus is, the idea is, if I can just find the arrow tool here. So we're likely to push up at an extension of this 72% strike rate on my testing on the markets that I do trade. So if we're to clone this, if we're to clone out this line here, what you're looking for is a low, right? So we're looking to test around this level here, and that would be where we're looking for that extension. Now, what else could give us confidence with this? Let me just show you something here. I'm going to go out to Forecaster, which is another one of my tools that I use for forecasting predicted moves and seasonality and projected moves in the market. If we go to Ethereum here and we click on seasonality, let's just pick, say, from today till, say, maybe the end of December, right? Let's just go to, I don't know, mid-December, say. So what, it's a couple of months away, a few months away. And I'm going to bring on the seasonality. I'm going to go 7 years and 10 years. And this is showing us over the last 10 years, the last 7 years, and the last 5 years, the seasonality of movement in price in this particular market. Now, if we scroll down, you can see if we're long, we've got 80% strike rate over 5 years, 57% over 7 years, 60% over 10 years, which is not too bad. That's edged on our favor, right? But what's really interesting is if we go down to the monthly averages, when I put out that last video, which was earlier in September, you can see September throughout the summer here, it's all bearish. You know, there's a downward move in terms of seasonality, the monthly averages. But look at October, 100%, 86%, 80%. Now today, the date is the 29th of September, right? So in 2 days' time, we're going to be into October, and that's where we enter this realm. Now, if we go back to the chart, what you can see is we've had that little dip, right? Now it's signaling that this will be the optimal place to get involved, to buy this market, to get the best bang for the buck. Now, does it mean that you should just go and buy it? No, you're going to have to go and test your system, test your strategy. But for me and my own analysis, based on my other markets that I do trade, it's no different. It's still a pattern that happens in the market frequently. And your goal as a trader is to build definitive and objective rules around these patterns that happen frequently, and then have enough filters and confluence to give you confidence to build a nice case for entry, to do that over and over again and be right over and over again, or at least more often than you're wrong. And then when you're right, you win more than you lose when you're wrong. And that is a trader's edge. You can do it in crypto, you can do it in Forex, you can do it in any market. And all you need to do it is some software tools like this platform, some great technical analysis skills, which you can learn at tier1trading.com or on this channel, and then some rules of engagement to get in a trade plan, basically, so you can do the same thing over and over again. So I'm looking at Ethereum against the US dollar here. If you was looking at getting involved with this, you could just go and place an order. As I showed you in my previous video, this is the Vantage platform that I'm using for this, because this is the platform that I've used personally to buy crypto myself, so I can trust it and I can show you guys without having a worry when my head hits the pillow. But I'll leave the details for Vantage in the description. I'll also leave the details for everything else that you see me use in these videos, so that you guys can go and have a whale of a time and fill your boots. So if you've got any other questions on trading patterns, trading setups, cryptocurrency, Forex market, let me know in the comments section. Let me know what you want to see more of, and I'll go deeper onto those topics. All right, so until next time, have a great one, and I'll see you in the next one.